Traders, what's up? Jamie Saettele here with Scandinavian Capital Markets and SB Trade Desk, and lots going on in the world of FX and beyond. So let's dive in. We are going to start today with a chart of TLT. It's basically just the long bond ETF. So the big story, right? Macro story in recent months has been the surge in interest rates, and that is denoted by TLT, by bonds going down, right? So bonds and rates move inverse to each other. If you're not familiar with this, so going down means interest rates are going up. I will show a chart of interest rates here in a little bit. The long bond rate, and you'll see that we're also at a resistance level there. So we've been focused on this really the last, I guess, I don't know, 3 or 4 trading days for a turn, okay? That means a turn higher in bonds, a turn lower in rates. And the main reason why, you can see from this chart, all right, is simply that we are at what I would deem pretty big support, or just a big level, right, for support. So you can see here this parallel, right? We just have a channel, and the parallel back here, 2013, big low, right? 2018, big low. Here we are in 2022. Also, we had that low there from February of 2019, thinking big low, right? So you zoom in, look at a daily chart. You can see here, we've got an island reversal type of deal going on here. And yeah, so far so good in terms of thinking that we're going to get some sort of a reaction off of this, which we have. But yeah, I don't know, from here, look, let's just, sake of argument's sake, let's say we do get a decent low. Frankly, the big resistance is probably going to be like up here, like this neckline, let's call it, right? So yeah, it's a pretty big move. Look, I'm not predicting that's going to happen. I'm just saying if we do get some reversal evidence, which we are getting right now, and we hold up, and we start to work higher in the coming days, weeks, and whatnot, it's kind of where I'd be thinking, right? So said I would look at a chart of 30-year yield, US, and let's go there. Okay, so here's the weekly chart of that, and this is going back like 40 years or so, just about. And you can see that the channel here and the parallels, associated parallels, pretty darn good in terms of nailing pivots. In fact, I've been writing about this each time we've gotten to one of these levels that, probably going to get a move in the other direction. And we got one here, March 2021, back November, early December. It's really when this next big leg started. And now we're at what I would call, again, big resistance, right? So let's kind of think lower here. That's where my head's at. So thinking lower in bonds, and this goes actually, what I'm going to talk about here, we had some questions on the YouTube video, and thank you, or on the YouTube page, and thank you for that. We have a question here: will DXY drive higher with interest rate hikes for the next year or two? It's a great question. And to be sure, as rates have just absolutely surged here in the US, and they have been going higher pretty much everywhere. However, they have gone higher, or the differentials have gone higher, and that's really where you want to look, is the differentials. First of all, no one knows if the dollar's going to go higher, if interest rates are going to go higher. That's probably a bit played out in terms of the rate move. And to be sure, there are times as well when rates go higher here and the dollar does not follow it, And really, again, it's the differential. So, like for example, I'm going to pull up. Let's pull up here. Let's just pull up the U.S. 10-year against the Japanese 10-year, right? So here's US. Let's go to a daily chart. Here's US 10-year, okay, and Japanese 10-year, right? So yes, we have absolutely ripped. If I overlay like a chart of dollar yen here, oops, I should do this a bit better. Hold on here, dollar yen, new price scale. There we go. Okay, so as you can see, for the most part, yes, they do follow. But again, this differential, so like we're seeing dollar yen reverse lower today, and we'll get to that, of course. We're also seeing Japanese or US Japanese 10-year spread reverse lower here as well, right? So these in and of themselves are kind of their own markets. Yeah, so as to your question, you know, will DXY drive higher with interest rate hikes the next year or two? It could be played out, you know, that narrative. That's certainly, you know, not a rare view anymore, that rates are going higher. So, you know, we could revert a little bit here. And that's kind of what I'm thinking, is that we do, in fact, revert a bit with these moves higher in rates and the dollar in particular against the yen. So let's move on to our currency pairs. All right, so let's go to US dollar USD LLAR, which again is a quarter each of pound, euro, Aussie, and yen. And this is a chart I think I posted yesterday, and that we were looking for a turn lower because we were at this upper parallel, this really long-term pitchfork. And we also had kind of got this big wedge, right, driving higher over the last, I guess, 14 months, you would say. And we have a bit of what we call in Elliott as an overthrow, right? Went through it, now we're back below it. So closing back below this would signal that we do indeed have a reversal. So that is bearish here on dollar broadly. Okay. Euro. Euro, frankly, is not one of the more interesting ones right now. We do have, so there's this trend line from 2017. We've kind of been screwing around with it. Again, look on a weekly basis, right? I mean, really the inability to break down after breaking this, to me, I don't know, really raises the specter of, let's call it a kind of a false break or a failed break, if you will, for euro, which in turn would be a positive development. I actually want to go. So, all right, this is the SB Trade Desk website. Long-term charts. I don't update these, but like maybe a couple times a year. In that sense, they truly are long-term. But like here is. You can see this was recent, April 7th here. So if we just look at price action going way back, actually to January 2017, this is kind of what I'm thinking. And again, this is Elliott. If you're not familiar with Elliott wave, it's a kind of a method of analyzing the markets. And I do incorporate Elliott into my analysis, right? I'm not like a pure Elliott psycho where, you know, all I do is, you know, sit there and count waves and all that. I do use other things, but, you know, at times it can be extremely useful. So to me, this makes the most sense in terms of the price action back here, right? So like, you know, big A, B, C, D, E, you know, these are all, you know, again, Elliott labels. And so the implication is that we turn up and probably rally back to 118-ish or so. And then you could have a turn lower possibly at that point and eventually go for a break. But again, this is a very long-term chart. It's a weekly chart. and I just wanted to kind of share that there. So something to think about in terms of Elliott. All right, so moving on, let's go now to, let's take a look at dollar yen. So there's a couple things here. All right, first, we have on this really long-term chart. So we had like this massive trend line. This was the break. I mean, that was nuts, right? It's really, this line goes off of 1990 and 1998, but then you extend it to the left, and you can see it hit the low back in 78. Line was resistance 2015. We broke it. Look, you don't always get a retest, right? But we've come into a level, you know, we've taken out 2015 high. We have some absolutely insane, you know, sentiment readings, if you will, shorter term, like DSI, Daily Sentiment Index, has been single digits for a while. The momentum, you know, is evidenced by RSI. I'll take a look at some of those in a second, are pretty crazy. So, you know, a snapback of sorts would make sense. And again, you know, just kind of throwing this up there with like TLT, bonds, yields, all that. It's the same trade right now. So, you know, if we do get that, you know, I feel pretty good or fairly confident in calling for some sort of a top here in dollar yen. You know, and what I say some sort of top, because I don't, you know, I'm not saying that like we reversed the whole move by any means. What I'm saying is that you have bonds, a great chart, great support there, right? Which is resistance and yields, right? You've got dollar yen with the crazy readings, and sentiment is silly. You know, just go to, you know, Google, type in Japanese yen, and see the things that come up. In fact, what's funny is started seeing calls for 130 like yesterday on some of these Bloomberg articles. We literally traded at 129.40 yesterday. So like, it just cracks me up. They start calling for 130 when you're trading 129.40. Like a month ago, we were trading like 118. You know, so like where the 130 calls then? It's just, it's a psychological phenomenon, psychological thing where, you know, people feel comfortable, you know, with that. And there's also, I know I'm kind of like going all over the place right now, but let's actually do this. Let's actually go to, hold on, let's go to Google. There's a couple things I want to talk about. All right, hold on. First of all, okay, Japanese yen. All right, so you pull up Japanese yen, go to news. Okay, so yen, we're starting to see the, so I talked about this yesterday, starting to see tumbles, right? That kind of language, right? Starting to see dollar surges against yen, yen tumbles, you know, tumble, lots of tumbling. That kind of language is considered strong, kind of emotive, if you will, language, which is not used during a quote unquote normal kind of market environment. It tends to be used, you tend to see proliferation of those words towards the end of a move, right? It's just natural human behavior to use strong, you know, kind of strong language, if you will, when the market, you know, is at a peak, when it's this most emotional, which by definition it means sentiment's extreme, which tends to result in the end of that move. And I'm not, you know, again, it might be short term, right? We might just be talking it might be a couple days, a couple weeks, what have you. But still, you can have a pretty big pullback after a move like this. Another one that I want to, and I love this one. This is great. So, okay, US dollar. All right, hold on. So, news, where was it? It was an opinion piece in the Wall Street Journal, and it was written by Paul Krugman. So anything he writes, you definitely want to fade. Where is it? It was up on the front page like yesterday. Irfan saying, do I have daily analysis on YouTube? No, I have daily analysis at SB Trade Desk, but the video or this webinar will be like kind of divided up, and there'll be videos on that. Hold on here. Oh, this is annoying. Wish I could find it. Huh. Well, let's see if that's annoying. Maybe it's gone. Krugman. Okay. Here you go. So this was it. So opinion. So this was Paul Krugman. Okay. Opinion. Why the dollar dominates. Now here's the thing, right? Like, so crowds are smart. That's why markets trend. George Soros had kind of his thoughts on markets, was, you want to be a trend follower when there's a lot of people saying this move doesn't make any sense, right? You want to be contrarian when people saying this makes so much sense, right? So basically you only want to be a contrarian once, sentiment is kind of like saying, oh, now this is why. Yeah, once everyone realizes like the reason for the move is probably over. I think this is a perfect example of that. So you have this like New York Times article by Krugman saying why the dollar dominates. That was 4 days ago. I don't think it's coincidence that's happening right where we are. And then today we're getting pretty decent reversals to the downside of the dollar. That's all I'm getting at. So I don't know. Just, kind of a art. And again, this is definitely not a scientific thing. This is reading sentiment and all is very much an art. But yeah, just, kind of another piece of the puzzle there, suggesting that maybe the dollar is a bit high for relative to where it will be in the near future. All right, back to the charts. Apologies for completely going off script there. All right, so where were we? All right, so dollar yen. Okay. So let's go to zoom in a little bit. All right, so we have a couple things here. First, I'll bring in this chart. This is a daily chart going all the way back to 2011. And this is essentially what your big new channel would look like. And 130 is the center line, maybe a hair above 130 actually. After today's kind of action, I'm not sure if we actually get there on this run. So we'll see. But here's another channeling technique, if you will. All right, so if we draw the channel from the 2021 low, right? So I talk about this kind of channeling stuff all of the time. And you have a corrective channel. Once you break out of that channel, the top side of that channel, that former upper parallel tends to become support, in which case it was here. I guess we missed it by about 10 pips, but you get the idea. Then what I have, these parallels are extended. This is half of the channel width extended. This is a full channel width extended. Okay, the full channel width is oftentimes a very useful target. So in this case, you can see half channel width was where we had the one pullback, right? Full channel width is what we hit the last 2 days, and we're reversing. So in other words, it's never easy, or to identify, if you will, kind of the levels to work with when you're at kind of stratospheric levels like this, right? We're at like 2-decade highs. So it's not like you can just, excuse me, get the hiccups. It's not like you can just look at a chart and say, oh, there's, former support and resistance, blah, blah, blah. So, I mean, it's just, in this case, you really can't, because we don't really have any at these levels. But what you do have is this channeling technique of a level. So from here, I'm just trying to trade between the parallels, right? So, I actually put some on last night up here, and I'm looking down here. So like 125.40, the next parallel, which was resistance, and again support. That's your next spot. Again, I love the analogy of kind of like a train station, if you will. You know, market. You know, you get on the train over here, get off the train here. Blah 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 blah. You don't need to be on the train all the time. So that's where my head's at with dollar yen. Again, you know, some pretty extreme wild moves. So, all right, there we go. Dollar yen, that's a lot. We've gone through that. Let's look at commodity currencies because they are very interesting, and then that will tie me into a question that I had from Hassan on YouTube, which is about dollar CAD. Once we go there, so let's go to Aussie first. So Aussie, we got bullish. I guess that was this week. Once we came down to that beautiful, beautiful support, former resistance became support. Now here's the thing. All right, 75.40 is going to be the 618 of the drop here. That's a big level. I am like really torn on which way we go, bigger picture. And that's why I actually wanted to bring in the long-term chart update here. So, all right, here was that long-term chart update again from April 7th on the SB Trade Desk website. We have the channel, long-term channel, and you can see that's where we're reversed. So like until you get out of this, you got to be nimble and trade, you know, both sides, you know, or just wait if that's your thing. But yeah, so like we came off, great. Okay, we were looking for support. You can see here, we were looking support down here, blah, blah, blah. And lo and behold, we got it. And now we've turned up sharply, and we're probably headed up towards 75.40 or so, and then kind of see what happens up there, right? In order to be like confidently, like really bullish on this, you've really got to break up out through that long-term parallel, which basically just means a break of the high from April 5th earlier this month. So it's really wait and see here. But yeah, for now, 75.40 looks, you know, like about where we're headed. Kiwi. All I have here is that there we go. All I've got here is that Kiwi came into the 618 retrace, right? Nailed it, turned higher. And at this point, the underside of that red trend line, right, is going to be up there about 68.90 or so, which has been a huge level. And again, it's also, I know we've looked at this a million times, but this is also the neckline back from the December 2019 high. And it really does cross a lot of key pivots and precise at that. You know, I know we've gone up, you know, through it and everything, but it's still useful. I mean, look at that high here on April 13th. Anyway, we're heading back there to 68.90, and that's going to be a big test, just like Kiwi 75.40 is a big test as well. So pay attention to that level. Okay. Dollar CAD. We've got a short here, and what a beautiful move this is. And this brings me to the question that I had from Hassan. So Hassan was saying dollar CAD trade setup into jobs data. Like this video specifically was way to touch the trend line around 26.20 to short, but the news scared me. I couldn't take position. Do you think it still steps for it? So, all right, first of all, you don't need to catch the exact top tick anyway, but like, check this out. So I've got VWAP 2022 volume weighted average price on here. That's this orange line. That's where we nailed. And this is a daily chart. Look at where we closed, right? So, I mean, I didn't trade the jobs data either. We waited for it, and then we put an entry to short back near 26, I think 26.15 or something like that, and then stop up here, and lo and behold, it finally started working today. But yeah, you know, I don't necessarily advocate putting on a position right in front of a news event either. You know, sometimes you're in it, and you know what's going to happen is what's going to happen. I mean, that's just the way it works. But like, I do love the setup, and I talked about this last week. I love the setup of having a setup and then having a news event to get that final spike, if you will, into the trade. And also, Hassan was asking, you know, where's the target? You know, well, I don't know, let it run, man. Like, you know, we broke this support, right? Broke it, came back, tested it. Like, this is a downtrend. Just go, you know, roll with it, man. Your first level to test is probably the center line, which was support down here. And that's going to be all the way down near, like, you know, 122.90, which is the low from October. So first level to think about is that. Again, you know, everyone's different. You got different time horizons and all that stuff. But like, you break that and then it's really off to the races. And oh, by the way, scroll out. Oh, we could have a huge double top, like a gigantic, stupid double top. So, you know, let it do its thing. All right, so that's dollar CAD. Obviously, dollar CAD probably looking the best out of all of these commodity currencies. You know, Aussie and Kiwi like them upside over the next couple of days, and then we'll see because we got big levels. Dollar CAD, that to me is a solid downtrend, and just kind of ride it and see what happens. All right, moving on. How about another commodity currency that people don't think a whole lot about? Dollar Mexican peso. Interestingly, it is actually not benefiting today. This is dollar peso. We had that reversal a couple weeks ago or so, or last week actually. And this is that was the setup. You saw the arrows. So what I was thinking is that we head back here, which is like 2040-ish, and then we tank. And by the way, you got the 20, 50 and 200-day averages right there too. So yeah, looking lower after you get a move higher. Not saying we get to move higher, but if you did, I'd be probably looking at that as a short opportunity. All right. How about a little Bitcoin, a little Ethereum? All right, so Bitcoin, we almost got to resistance today. We were looking for probably resistance, that center line, 43,000 or so. Bitcoin's stuck in a little range. Interestingly, it is actually one of the quieter things these days. You could say the maturation of Bitcoin. Bitcoin has certainly matured, right? And it's not moving like, you know, 10% a day like it used to. So I'm still kind of cautious on this on the downside. I mean, you know, you've got VWAP from the high, resistance, sharp moves down. Look for resistance back there near 43,000. Ethereum, same thing, still cautious here. VWAP to VWAP, VWAP from the high, resistance, right? 2022 VWAP support. This is one where it could be an interesting short setup back near 3,300. Okay, that's just the 618 of this latest leg down. You can see here, I've also got, you can see this trend line that goes back to the May and September highs. And that's been key, like, you know, support, 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 break, good night, resistance. So to me, this keeps me kind of on the defensive with Bitcoin looking lower, with Ethereum. But yeah, both Bitcoin and Ethereum, you know, their trend characteristics are kind of negative right now with the longer term moving averages and all that good stuff. So I wouldn't just be like jumping right in and assuming that we go higher. Yeah, actually lean towards the short side, setups again here near 3,300. All right, let's take a quick look at gold and silver. They might be ready to do something again. Remember, we said, I guess, you know, a month or so ago that we probably needed to mark some time, you know, put some ink in because we had some emotional moves, right? And at this point, you can see we've more or less gone sideways, you know, for, I guess, a month and a half or so after top or down to sideways, I should say. But here with silver, if we're kind of resetting for another move higher, you know, pay attention to, you know, high 24s, you know, to hold and maybe return to the long side, right? I hate, I wouldn't want to be sitting in this for the last month or so. It's, so you got to get out, right? This isn't, got to get out, you get back in. You're just tying up capital if you're sitting in this. But yeah, I'm interested in the long side again for the first time in a while, back near, again, high 24s. That's silver, which looks a little more interesting to me actually than gold. Gold certainly held up a little better, but when you get big metal moves, silver's going to outperform usually. With gold, level that I pay attention to for support. So first of all, we retrace like 618 of this move. I like to look at the low day and throw the close on there, and that's a concept that's from Tom DeMark, daily, reversal, support and resistance levels. And you can see the close of that, look across, see all those little lows. That's a level to pay attention to, and that's going to be 1919. I'm not saying that we can't go higher right here, because we could, and you've got 2022 VWAP right there, so you could go higher. However, if we do pull back a little bit, put a little more time to reset this move, 1919 is my spot. That's the spot to look at. Okay. All right. Quick on the indices. We had a very nice recovery in NASDAQ, and we bottomed near that 618 retrace of the move up. And really, for all the fear that's in the marketplace, this was the 24th. That was the day. That was like the start of the Russian invasion in Ukraine. And since then, we are sideways. So again, how does this resolve? I don't know. We're still above that really long-term parallel, right? Back to 2014. And that's really the big spot. So like my gut says that we trade higher off of this back to like 14.5, 14.6. And again, this is NASDAQ futures. And then we try to put in another high and then roll over and really challenge this again. That's what I'm thinking. But if you do break this line, then just look out and you don't want to hold that bag. All right. That's NASDAQ. Dow looks very different, and you're seeing that today with the dollar being weak notably against commodity currencies, and that's you're seeing the Dow outperformance today. But I'll take my cues on the general equity markets, I guess you'd say, if you want to call it that, from the NASDAQ, given the big part of the market that tech is. So that's that. All right. Trying to think. I don't think I've really got anything else to look at. So yeah, those were some good questions that we had. Thank you for those. And continue to throw those questions up on YouTube, guys. Also, real quick, so like, don't forget, we've got, if you go to Twitter, my Twitter page is at Jamie Saettele, just my name. But I've got the link on there to our prop trading program, ScandinavianMarkets.com/getfunded. And again, check that out. Okay, this is going to be, we've had, excuse me, we've had, a lot of questions here. We've, kind of revamped the program. So come check it out. You can read all about it. Essentially, you can get funded with up to $2 million. You can get funded with far less, of course. There's an assessment fee. Once you pass that, you do get funded. There's no time constraints or time limits like other programs in which you have to make a certain amount of time. Trading does not work like that, right? Everyone's different. There are drawdown limits, of course, and there are targets that you do need to hit, but you don't have to hit it within a certain amount of time. Okay, if it takes you 6 months, fine. It takes you a year, fine. If it takes you a month, great, right? But there is no time limit like other programs have. So come check that out. And yeah, that is really about it. So again, that's it. Maybe we're getting that dollar top up here today, or forming it with the down day that we've got. And yeah, I will be back next week, of course. So again, Jamie Saettele here, signing off with the Power Hour and Scandinavian Capital Markets and SB Trade Desk. And good luck and have a great rest of your week. All right, bye.